All right, good morning, everybody. Hope you guys had a wonderful weekend. Today is Monday, September the 8th. Getting into the ninth month, or where are we at? 8th month of the year. Market set to gap higher. The S&P 500 set to open up here at 648 within pennies of a new all-time high. And it seems to be a theme. We could continue to print new all-time highs. Those who haven't been following the markets closely, it's been a roller coaster of a year. Open the year into new high ground here. Of course, we had the tariff situation where President Trump basically declared trade war on the entire world. Market set off in panic at a very quick bear market. Stocks fell at their peak just over 20%, which is a technical bear market line. And then we recovered in a hurry. We actually called the low of the market here on the 11th, got back in, and it's been a monstrous ride higher. And now we continue to push up. And one of the things I feel that a lot of investors that make a big mistake is they're waiting on the economy to tell them it's good time to get in the market. And one of the first things you need to learn as an investor, as an active trader, is that the economy does not lead the market leads the economy. You always want to remember this. The stock market is a discounting mechanism. It is pricing in both all known information and all assumptions for the future. And so people who sit around and go, all right, once GDP is healthy, once inflation is tamed, once I find out what Apple's sales are going to be, then I'll invest in the stock. And by that point, you are very, very late to the party. The market has already priced in that information. It runs in anticipation of future events. And there's a saying that bull markets are born on pessimism, they thrive on complacency, and they top on euphoria. And what that means is when everyone is scared to death and panicking, that's usually when the buying starts. When people are unsure, stepping their toes in the water, the bull market is up and healthy. And then once your cab driver and the checkout person at the grocery store talking stocks, that's when you're getting near a high. So we are in the early stages of a strong bull market. All the underlying metrics we look to are still very, very strong. One of those things we look at is this indicator known as the net new highs. And all it's doing is every day it takes every single stock on the NASDAQ, New York, and American Exchange, counts how many stocks made a new 52-week high today, minus how many made a new 52-week low today. And if that number is positive, more stocks made a high, it prints a green number. If it's negative and more stocks painted a low, it's a red number. And all that's trying to do is be sure that you have a healthy market beneath the surface. It's not Amazon, Google, Netflix, Nvidia, Tesla holding up the whole market. It is broad-based. And so what you'll typically see, and we're talking about this indicator here in the middle, is, during a bear market, like we got in 2022, you'll start to see a lot of red. You'll start to see this weakness. And this, when more stocks are making new lows than highs, probably not a great time to be in. However, in a strong bull market, like we saw here in 2021 and leading to 2022, it's mostly green. And so this is something we like to keep an eye on because we want to see the weakness as it comes. And you see here back in December, there was 1, 2, 3, 4, 5, 6, 7, 8, and 9. It's basically 2 weeks straight making new lows, one new high day, new low, 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 low. It was forecasting. It's letting you know there's weakness beneath the surface. And of course, that led to this nasty bear market. And as soon as things turn green, we've been printing higher. And so until we start seeing net lows or we start seeing this really decaying, we're still pretty much in a strong bull market. The other thing we like to look at is something known as the advanced decline line. And so what you're looking at here, and by the way, everything I show you here, everything except this one indicator, are all free indicators. So if you want to plot this on your chart, if you use TradingView, I've just got a chart of the SPX, the S&P 500. And then on the bottom, there's an indicator. The ticker is 8, accumulation distribution line. That's what it is right there, advanced decline line. And so all the advanced decline line does is very similar to the net new highs number. It takes how many stocks were up on the day minus down. If it's a positive number, it adds that to the previous reading. If it's a negative number, it subtracts. So it's an ongoing reading of that metric. And so if you continue to print more stocks making highs, that line's going to rise. And what this does is often warn you of imminent pullbacks or confirm strong rallies. And the best way to show you this is, again, go back to that 2022 bear market. I'm just going to scroll this chart back here. And if you notice, again, the S&P 500 index is on the bottom. The advanced decline line is, S&P is on the top, advanced decline's on the bottom. Look at what we saw here. This is late 2021. Notice how the index continued to climb August, September, October, November, December. Yet the advanced decline line was flat. And so what that tells you is, even though the index is rising, it's not a healthy market. Because if you look at all 3, 5, 7,000 stocks, they're not all pushing higher. And the reason this can happen is that indexes are market cap weighted. The bigger the company, the more weight it has on the index. So you see, the S&P is up today. The NASDAQ is up 2%. Well, 10 stocks carry about 40% of the weight of the S&P index. If NVIDIA, Amazon, Microsoft, Google, Tesla, Apple, right? If those stocks are up, the other 490 can be weak and it'll hide it. And so this was your warning sign. The market is, in fact, not healthy. It began to roll over. The markets, of course, followed. We had the nasty 2022 bear market play out. Well, I tell you all that to say that is not the case today. In fact, the advanced decline line is up here making new highs before the market. So it is showing strength, continuation. It's a very healthy market beneath the surface. And then one other indicator I like to look at, and just one thing to keep cognizant of, is interest rates. And I've got the NASDAQ on the top. The Fed funds rate, that's in yellow. That's just what Jerome Powell said. That's all we cut, we raise. That's just the interbank lending rate that kind of dictates what others do. Here in the middle is the 10-year bond yield. And, of course, government bonds are very much safe. Interest rates, when you're looking at fixed income products, you're looking at buying a bond or something. If you buy a government bond, you're going to get paid back. Our government couldn't balance a checkbook to save its life, but they always meet their obligations. Why? Because they tax you and me, or they print the money. It's as safe as it's going to get. But that's not the case if you lent to a private company. If you lent to a trucking company, if you lent to Jim Bob's Bait and Tackle, there's a risk you don't get paid back. And so on the bottom is a rate known as the high yield index. And the ticker symbol for this, I will type it in there if you guys want to track this. Let me put it in here. This is the high yield index. Rate. That's the ticker symbol if you guys use TradingView. And what this interest rate does is include risk, right? Because if the economy is very weak, if banks are fearful, they're going to charge more interest. If you've got a business, how many of you guys in here are business owners? If your business has been operational for 20 years, steady as can be, you've got steady cash flow, you're probably getting good interest rates. If your business is 6 months old, very, very well may fail, they're going to charge you a lot more. It's a riskier loan. So what this does is show you the interest rate loan to these higher risk businesses. And if you look over here, when the tariff situation was going on February and March, look at how this rate soared from 6.8 to 8.5, showing a risky environment. Stocks were falling. As that began to roll over, the market has soared higher. And it is, in fact, sitting on the lowest level it's been in, years. All the way back here since 2022. So, nothing is guaranteed, of course, but we have a market reaching into new high ground. We have net new highs printing strong. We have an advancing or a rising advanced decline line. We have a risk rate on the way down. all of which are very good, strong signs. So unless I see or until I see something to the contrary, it's foot on the gas. I'm buying stocks. I want to be on the long side. Okay? Questions about any of that so far? And if you are new, by the way, don't worry. None of this is something you need to know on day one. I'm just kind of sharing a big picture outlook for our members who've been here for a while. Any questions so far? Now, if you are not a member, there should be a link down there. In fact, I can go ahead and type it in. That link is just tradewithross.com. I think we have a $5 offer. It's dirt cheap. We'll give you access to this indicator. I'm going to show you here in a second. You get these live sessions twice a week. We put out some trade alerts once a month or so. Lots and lots of value. Again, it's $5. Join, don't join. I don't really care. But it's if you want to learn more, it's going to cost you less than a cup of coffee. So click that link there. Now, one of the other things we like to focus on is where the strength is in the market. Okay, how many people have a hard time knowing even where to look, what kind of stocks to pick? And don't be bashful, type it in there. People might look to the news. They might, I heard some story about this. My friend told me about this stock. I saw this on a Reddit board. There's this. But there's 7, 8, 9,000 publicly traded stocks out there. I'm not going through 7,000 charts every day. There's no sense in doing it. And why would you? Because when you think about what moves stock prices, what causes these big rallies, it's not you and me. And Berto and M, Tom, Matt. Hey, what's up, Matt? Good to see you. Robert, Alan. I know Tyler's in here. Darren, Carl, good to see you. It's not us moving stock. It's the big institutional dollars, what they'll call the smart money. And it doesn't mean they're smarter than you. It just means they're moving billions. And so when Warren Buffett's buying a stock, he's buying tens or hundreds of millions of shares. When BlackRock or Blackstone or JP Morgan or the Notre Dame Endowment Fund or Kathy Woods, God bless that god-awful investor, but she manages billions. And so when they're buying massive amounts of shares, that's going to move stocks higher. When they're selling massive amounts of shares, it's going to drive stocks lower. So whatever they are buying in mass is going to go up, period, hard stop. And whatever they are selling is going to go down. And so it is very important that we are cognizant of some kind of focus on where they are buying. And when you think about how long it takes them or how they buy, it's very different than you and I. If you and I want to buy Apple, boom, give me 100 shares, 500 shares, 1,000 shares, we're in. Not them. You can't sit out there and buy 100 million shares. Buffett owns 300 million. It took him 2 months to build that position. They have to buy day after day, week after week, month after month to build that position up. And as they do that, as they buy those stocks in those areas, those sectors are going to rise faster than others. And so by looking at the areas of the market that are outperforming over the last 1 month, 2 months, 3 months, 6 months, etc., we can see where this smart money is investing. We can see which stocks they are constantly buying day after day, week after week. And by doing that, we now know where to hunt. These are the stocked ponds. Instead of dropping your boat in the middle of the ocean and hoping you catch a fish, we're going to a pond full of 7 and 8 pound largemouth bass, and we're dropping our line in there. And your odds of catching a monster are far better, period. Now, you take a group like, pharmaceuticals, right? That's not a top performing area right now. Is there going to be 1 or 2 pharmaceutical stocks to make a monstrous move? Absolutely. But the bulk of the winners are going to come from these top performing groups. So that's where I want to focus. And if we can identify the top 3, 4, 5 areas of the market, look at the top 10, 12 stocks in each of those groups, we can take a market of 8,000 stocks down to a focus list of 50 and have a hell of a lot easier time and greatly improve our odds of success. Does that make sense? Questions about any of this? By the way, do me a favor, hit the little heart button or the like on this video. I'm not sure which one it is, but let's try to get the algorithm putting us out there and see if we can get some more people in here to join us. Questions about this? Thank you, guys. Hey, Malvina, and thank you for the kind comment. I saw your message on the video yesterday. I meant to, I don't remember if I responded to you or not, but I appreciate you saying that. I took my 6-year-old son into the office to shoot that video. We were getting a lot of questions on how to buy silver. So, man, my son came into the office yesterday and shot that. Okay, so we know what we're looking at. And what are the strong areas? All right, what are we seeing? Well, solar energy is really starting to perform here. Solar's number 1 over the last 1 month. It's number 5 over the last 2 months. It's number 2 over the last 3 months. It's number 4 over the last 6 months. This is an area their dollars are flowing into. We want to keep cognizant of it. What else? Well, look here. Home builders, very strong. Here we have home builders and we have building products. On the 3-month, we have home builders and we have building products. On the 6-month, we have building products. So this, again, another area that dollars are flowing into. They're betting on a housing boom in 2026. We have interest rates coming down. We have the promise of 5 to 6 or expectation of 5, 6, maybe 8 rate cuts in 2026. We have the President of the United States basically big boying the chairman of the Federal Reserve, demanding he cut rates. He's going to replace him in May with somebody who will do so. So they're seeing the writing on the wall and they're putting money. So that's an area we want to focus on. So we can very quickly figure out where we want to focus our efforts. So we're going to focus on solar. We're going to focus on building materials and home builders. And we can just build lists of this. Now, what I've got here is a list I put together of home builders and building material stocks. And if you think you can't do this, anyone can. All you would do is, it's something as simple as this. Open up a web browser. Go to Home Builders ETF. Okay. Find one here. It'll be like with the top. Okay. iShares Home Construction ETF. Great. Every one of these exchange traded funds is required to report their holdings. And so you go, all right, what are your holdings? Where is it? Fees, holdings. There it is. There's their stocks. And they list them by weights. Their biggest holding is DHI, D.R. Horton, Lennar, Polta Group, NVR, Toll Brothers, Lowe's, Home Depot, Top Build, Sherman-Williams. And you just add these to a list. They've done the hard work for you. There's professionals on Wall Street whose entire job is to maintain an exchange-traded fund tracking the rough performance in a home building sector. They've done the work. Just put the names over, and now you've got your hunting list. So you've got Allegion. Look at these thing moving higher. You've got American Woodmark looking really strong. A.O. Smith trying to break out above 75. Apogee forming a low base. R-House, BLD looking strong. Builders First Source. I bought Beazer Homes about a week ago. It hasn't done much yet, only about 4%. But the reason I bought it is coming out of a stage 1 base down here along the bottom. We also have that nice, clean breakout pattern forming here on the chart. And so I bought in here as it was emerging. I'm looking for a move up here into the mid-30s. So how many of you have no idea what I've just drawn on the chart here? I know you guys have been with me for a while, do. How many of you are just like, what on earth is that and why is it important? Please tell me. I'm going to walk you through this. This breakout pattern is one of the biggest secrets to making big and fast gains in the market. And if you do not know this, you're doing yourself a huge disservice. So, I think I added a new one to this list. Where is it? RSI. All right, perfect example right in here. In fact, there's several of them back in here, but I'll just show you this. So this is a pattern we want to look for. And this is going to be, you'll see it form both down here off the lows after a big move higher. You can also see it when the stock is up at highs. But here's what's happening. The stock is compressing, consolidating as supply is absorbed from the market. Okay, so in this case, it was a big drop. This was, of course, due to the tariff situation that scared everybody. But as the stock comes down, these institutions begin building positions. And the way they work is they're just buying based off of essentially a big Excel spreadsheet, to put it mildly, right? They're saying, all right, what are our expectations for this company? What are their assets? What is their debt? What are they worth on paper? What do we think they're going to make next quarter, next year, 2 years? What do we think the growth's going to be? What do we think GDP is going to be? Where are interest rates going to be? And they discount all that information, known as the discount cash flow model, and say, all right, based on all of our assumptions, we believe this stock 2 years from now should be worth $25 a share. And they're looking at it and it's trading at 10. So, all right, that's severely undervalued. We're going to begin building a position in the stock. And as they start buying, it goes from 10, 12, 13 bucks. As it gets a little bit high, then they start pulling tricks. They may send a big sell order, something known as spoofing, to drive the prices down. They may release an article on Yahoo Finance or on Bloomberg about how, Rush Street Interactive could be in trouble, or the video game sector's in turmoil, or why we think the market could fall. They're doing everything they can to scare investors, to shake people out, drive the stock down. And each time they do, they are buying it back up. And so what they are doing is essentially creating the supply in the stock. They want to buy tons and tons of shares, but if they just go buy them all, it's going to do this. So they're buying, triggering it to sell off, taking advantage, shaking you out, buying it up. Everyone heard, oh, he ran my stop loss, whatever. That absolutely happens. And once they've accumulated as much as they can, once they've bought every share they can get their hands on in this kind of $10, $12, $13 range, they've absorbed all the supply. Anyone who is willing to sell at 11, 12, 13 bucks, anybody they could scare out, is now out of the position. And so now if they want to keep buying, which they do, they now have to pay up. Will you take 13? Will you take 14? Will you take 15? And that's what allows these stocks to make these pretty big runs very quickly. And if you look down here at the bottom, at the volume, how many shares traded, look at how many shares traded March, April, May, and then look at how many shares traded June, July, August. Now, other than this one big up day here on the earnings day where it spiked up, this volume was not any bigger than this volume. In other words, it's not as if there's this massive increase in buying in RSI stock. What happened was it's the same amount of buying, but there's less supply. The same, I don't know the number, the same 50 million shares that were purchased here were purchased here, but they're chasing far fewer shares being offered for sale. And so that supply and demand dynamic is what allows you to get in for these big and fast moves. So once it is shallowed and compressed and tightened, and then it breaks through this resistance here, once it gets above this kind of ceiling, that's when I want to buy, because that's when the odds are in my favor and I have a chance at capturing a big and fast move. And in this case, you bought the breakout here, you were up 55% in about 2 months. And you will see this same pattern form both after a dip like we saw here and also up at its highs. So if you look here at Primoris, now if we go back in time here, and I'll just use the magic of the internet, look at this stock here. Now this thing was up into new highs. It had gone from 29 to 40 in a couple of months. And it runs up, and look what it does here. Makes a big run, they shock it down, big single day drop, and what do? They quickly take advantage and drive it higher. It hits 42 again, they sell it off, drive it back higher. Sell it off, drive it back higher. And you'll notice that these pullbacks get shallower and shallower and shallower as you go from left to right. That is the supply being sucked out of the market. There were fewer and fewer and fewer shares available for sale. And anyone can see that the line in the sand is about $42 a share. Helen Keller could spot that resistance. The stock can't get above 42, can't get above 42, can't get above 42. When it finally does here, that's when I want to buy. And it quickly, begins powering higher. And when done properly, when you catch a good one of these, it doesn't really go against you. How many of you guys heard I got diamond hands. I'm holding no matter what. Y'all are weak. I have the papers. I got wet paper hands. I am such a total chicken. I have no interest in holding a stock as it comes down 10 and 20 and 30 and 40%. Not going to happen. And you don't need to. Folks, if you take a 50% loss on a stock, you need to make 100% on the next one just to get back to break even. Don't do that. Don't take big losses, especially when you don't need to. Risk 5, 7, 8, 10%, and you still have the opportunity to get in these big runs. And the other beauty of this, and we're going to go into some live stocks here in just a second, the other beauty of this is you don't need to risk a lot of money. You see, once this thing runs, sells off, and comes back to the high, we know that this stock should not get back below this level. That's the beauty of this shallowing pattern. It should not go back down there. That's what he stepped in to buy. As it shallows again and goes back up, the next time, it should not go below that high. It should not go, below that low. And so as these things get tighter, as we move from left to right, then once we buy this breakout, and in this case would have bought right in here, our stop loss would have been here, and it came close. Didn't touch it, though. But we only needed to risk, in this case, 3%. 3%. And while this didn't make 1,000,000%, it's a building materials company, okay? It's not a $2 biotech. If you risk 3% to make 33%, that's a pretty darn good ratio. And if you can make 2, 3, 4, in this case, 10 times your risk, you don't even need to be right that much. Our goal is to make 2 to 3 times our risk. We risk 10%, we want to make 20 to 30. I risk 5%, I want to make it a minimum 10 to 15. And if you're making 3 times your risk, you only need to be right 1 out of every 4 times. And so if you're right half the time, you're going to make a ton of money. If you're right a third of the time, you're going to make money. What screws people up is when they come in and they buy up here and say, I know it's going to go up, and it runs down 42%. Even if you did hold, which you didn't, you're lucky if you got out up here at 38. So you're risking at least 42 to make 30. That doesn't work. I'm happy to get stopped out right here. And say, well, Ross, it came back. Sure, this one did. The next one might not. And so that is the primary breakout pattern I want you guys to be looking for, especially in a strong market. And we did it here in NuScale Power back in April. This was the strong area of the market. When we looked at these charts back in April and May, it was nuclear and uranium number 1, nuclear and uranium, nuclear and uranium, nuclear and uranium. It was clear as day the top group. This is NuScale Power, a nuclear stock. It sold off with the tariff situation, and then it came in and put in just a textbook shallowing pattern right up here against the highs. I bought it right there. We told our members to buy it right there. Our stop loss was that red line, so we risked a whopping 10%, 11%, and the stock surged. It was up 96% in 2.5 weeks. It was up 140% in 5 weeks, up 190% in 2.5 months, all on a 10 to 11% risk. And whether you got out in here or you got tagged out here or you sold it in here, wherever, you still made a big multiple of your risk. Okay? So questions about any of this? The market opens up in 1 minute. Questions before we see a live market and what opportunities we have. And by the way, if you haven't already, hit the like button on this video. Please do me a huge favor. For our members, you guys know that we deliver a lot of value. If you're brand new here joining us, this is free information. I don't even need to sell you other than if you want to go to that tradewithross.com link, you want to join us for an entire year, it's $5. If $5 is too much for you, you probably wouldn't be trading stocks. So click that link if you would and join us. By the way, all of our members, we give you access to this market health indicator. So this is something we've built, and you can show the last 1 month, 2 months, 3, 6, 9, best performers, worst performers, position on your chart, whoever you want. And this has just become a really invaluable tool we have for identifying the strength. And this over here on the left, you can also get access to is our market health gauge. It's got a number of internal indicators and just kind of gives us you see the market was weak in here. When it's red, we want to stay out. When it's pink, it's starting to turn around. When it's green, you want to be invested. And so for the most part, keeps us in during the good rallies and out during the very bad periods. Okay. Sure thing, Ollie. I mean, to ask about bid versus ask, was in the purchase price, ETF stocks. Malvina, I typically just take it to the market. The bid and the ask, at least on the stocks I'm trading, is generally a penny, 2 pennies. So the bid price, which is the highest someone is currently offering, maybe $10.05. The ask price, what is being offered for sale, maybe $10.06 or 7 cents. So it's generally a penny or two wide. They used to say, don't be a blank for a tick. I'm not going to say the word here on YouTube Live, but yeah, I just take it to the market. If you're talking about options or something where the spread is very wide, I'll use a buy limit order so I don't overpay or get a bad fill in the sell. But for stocks, just market buy, market sell. Give me in. I'm not going to screw around with it. Okay, other questions? And please feel free to fire away here if you have anything or stocks you want to look at. So let's go see what we can find here in the construction group. And again, one of the stocks we bought, SHLS, I guess we got this one 2 weeks ago. This is a solar stock. And as you can see, this thing's coming out of a pretty big stage 1 base. We haven't really gone into the stage of the stock cycle here today. But essentially, the 4 stages of the stock cycle show you where that stock lies within its life cycle. And if you guys want to screenshot this, I won't go deep into it today, but essentially stocks will kind of get into this basing accumulation phase where they're very cheap, their value, they're being bought up. It goes into stage 2 where the stock is very hot. It's in a hot group. They're growing earnings. They've got a hot new product, a new drug, a new AI model, whatever, and it surges higher as it's constantly being bought. The stock then eventually hits a price target. Institutions begin getting out, goes into the distribution phase where you see these wild, volatile swings. The smart money's getting out. And then once they're all out of the stock and there's no more consistent buying, it goes into the markdown phase, and you typically see these leading stocks fall 50 to 80% during this window. And every growth stock goes through these phases. If you go back and look at weekly charts, go to logarithmic scale, look at charts of Apple and Google and NVIDIA and Microsoft and Tesla, all of them have gone through the same period, the same process over and over again throughout their life cycle. And go back to 2022, you'll see PayPal, you'll see Netflix, you'll see these big name brand, salt of the earth, not salt of the earth, but household name companies that fell 60, 70, 80% for no reason other than the fact that the big institutions were selling and taking risk off the table. All right, and so when we look at a stock like SHLS and we go into the weekly chart, you can see here the big stage 4 decline, the big, stage 1 base down here on the bottom, and it is trying to emerge into a new stage 2 rally. And this is a solar stock. We talked about solar, the strength here we're seeing in solar energy, solar energy, solar energy, solar energy. So it's an area you want to focus on. And so we bought this thing in a live session last week, and it hasn't done much yet. I mean, I was up, 14, 15%. Last week, it's now kind of faltering around. It's a volatile stock. What are we up? 8% right now. And I got it pretty late. I should have bought here at about 640. We saw it at about 650 and got into it, but we'll see what that one does. The other one I got into was Beazer Homes, BZH, and these are just little pilot trades. Same idea here. You see the big stage 4 decline. It fell from 38 to 17. Just sort of buying it up, and it shallowed, and it shallowed. This is what we call a shakeout move, where it runs all the stops, like I told you about, and then rips right back up higher and tightens up. So this also looking very good. Market's betting on housing. So we're just putting all the pieces together. We have a bull market? Absolutely. We covered that in the beginning. What are our strong groups? Solar, home building, construction, etc. And then we're looking for the either breakout patterns or coming at a new stage 1 basis and trying to buy as they emerge higher. So it's just, you just follow this repeatable process. And listen, not every stock you buy is going to double your money. It's not 100%. There's no such thing. Anybody who tells you they got a strategy that never loses, run as fast as you can. There's never been a trader in history that doesn't have losers. The best who've ever lived, the best traders who have ever lived, who've made hundreds of millions in a good market, are right 60, maybe 65% of the time, and that's in a good market. It is all about controlling your risk, solid risk-reward ratios, making 2, 3, 4 plus times what you risk. It's not about being right every time. So just go ahead and, when you buy a stock, just assume you're going to take that hit. It's going to be a 7% stop loss. Okay, that's $600 or $60 or $6,000, whatever the number is for you, and just go ahead and accept it. And once you've accepted the loss, it's not going to affect you if it does roll over and hit. And you're going to trade much more clear-headed. So, again, if you haven't already, hit the like button down there. And tell you what, give me some stocks. Let's do a little lightning round. I'm going to try to be a little bit better than Jim Cramer and not curse your stocks like he does in his lightning round. Good God, that man could burn money. Give me some stocks. Let's fire through a couple here, see what we got. And again, any question on what I've covered, please ask them. We generally run for an hour Monday mornings. If I need to stay longer, I absolutely will. Nothing is off limits. This is real money. We are live. You let me know what you want to cover. Kurt, you got SHLS. We spoke about it. Okay. Can I look at Hood? Yes, Robinhood. Been a big leading stock for this run. It came down. What was the news? I wish you don't want my analyst in here with me. I think they were being sued, and then they emerged from that. So you see it gapping up. Actually, was this earnings? Let me make sure. Hold on. I don't want to mix you up here. Okay, still not showing me earnings. All right, we'll see. What is the news here? Oh, join the S&P 500. Yes, so Robinhood up in the news that joined the S&P. Thank you very much. Yeah, John, you know, there's 2 stocks that actually joined the S&P. One of them was Robinhood. The other was, I screenshot this stuff over the weekend as it comes up on my phone. Somebody help me out. What was the other one? Stock that joined the S&P. Somebody will tell me. Thank you. APP. Yes, AppLovin. So APP and Hood both joined the S&P. This looks very strong. And when a stock joins the S&P 500, here's what happens. The S&P 500 is an index comprising the largest 500 U.S. stocks. There are trillions and trillions of dollars indexed to the S&P 500. They're in mutual funds, exchange-traded funds, and those funds must hold all those 500 stocks in the same ratio so that their fund mimics the return of the S&P 500. So when a company is added to the index, all those funds must go out and buy it. And that's why it can make these big moves. And so the day it gets added, they'll be adding it. Tesla, when it was added to the S&P back in 2020, it had like a massive 3-month rally. But yes, Robinhood looks very, very good. It is a strong leading stock. You can see the breakout pattern I've drawn out here on the bottom from back in April and May. It has been riding its 21-day moving average, pulled back to the 50 and has bounced. Now, quick lesson for everybody, and put this one in your vault. When you get a leading stock, a Robinhood, an NVIDIA, anything that's doing this, in a good bull market, it's up 30, 40, 50, 80, 100%. The first pullback to the 50-day moving average, and that's this line right here, is always a buy. When you see one of these stocks taking off, the first time it pulls back to the 50-day moving average, buy it and put in a 10 to 12% stop. The odds of this working are enormously high. You always want to buy the first dip to the 50-day moving average. Okay? I don't care what the news is. Oh, they're getting sued. Oh, they're earning. Buy the first dip to the 50. It'll work a lot more often than it doesn't. Okay? Are we late on Robinhood? Sure. Yeah, we're late. I mean, ideally, it would have been to buy back here in May. But look, it's up 100%, 140, 50%. It looked like you were late. That was 150% back in March 2024. And then it kept going, and it kept going, and it kept going. Look, Robinhood is currently valued at $100 billion. Okay? Now, once, I don't want to age shame anybody here, okay, but let's be honest. I'm 42. Most people in 40, 50, 60-year-old aren't big Robinhood fans generally. We want a company like Schwab or one of these old banks, right? Well, Schwab is currently worth $160 billion. Fast forward 10 years, 15 years, 20 years. Do you think Schwab is going to have more money of the people who are currently in their 20s and 30s and 40s? Or do you think Robinhood's going to have more? The fact that they teamed up with a bank and are offering banking products. So this could absolutely exceed that and then some. So it could easily double again. How about Schwab? Oh, so John just mentioned Schwab. Schwab to the downside. Have a $94 put. Sure. I don't know what this news was here where it dropped on Friday. Bad news report. I'm not sure to dig into this. Yeah, I mean, it broke the 50 pretty substantially, closed on the bottom, opening up down the low. It looks very bad. So, sure, I could see that on the downside. I'm not looking for shorts right now, but if I was, yeah. I mean, this is an early break. You had July, August, September base all up in here. It is broken through with a vengeance. Down 5% on the day, closing on the low of that candle, opening up right in here. Sure, absolutely. I can make that. All right, a lot of stocks. Let me get through these. Toll is a good chart for this. Toll Brothers. Yes, Toll Brothers is beautiful. Beautiful. Look at that uptrend. Been riding the 21-day moving average all the way up. And you see I've drawn here. I mean, a little breakout over in here. Ran from 100 to 130. Got a little choppy. It's been in a big stage 4 downtrend. As the rate cuts everyone is looking for didn't come. If you're a home builder and mortgages are 8%, and like, all right, when they get down to 6 and 5.5, we're going to sell a lot of houses and they never come down, the market is going to discount that. They're going to price that in. Now the stock is rising. Why? Are mortgage rates down to 5%? Have there been any cuts by the Fed? No. They're expecting them going forward. And is pricing that in. So, yes, Toll Brothers looks fantastic. All right, I'm way behind on stocks. Let me look at here. TDW. Tidewater. Let's see what we got here. Marine shipping. Yeah, I mean, it looks good. It's not my favorite area of the market, but it does look like it is coming out of a stage 1 base. You can see the consolidation down here off the lows. And again, it's not always going to be perfect to the penny. Remember, this is the market. It is lots of buyers and sellers. There are lots of imperfections, but you can see that kind of shallowing pattern. It emerged into the supply from January, so I'm not shocked it is stalling here. But yes, it does look like it wants to get going and run up here to the 80s or 90s. Sorry, going through these questions. Look at DQ. DQ's a solar stock, correct? Yeah. Beautiful. I mean, this thing's a monster. Look at this base off the low, though. If you guys will burn this image into your head, I'm telling you, it will make you millions. I mean, this wasn't a leading group at the time, so I would have missed this one. But just look at how, I mean, it's poetry when these play out properly. And it gapped up. So you would have done an opening range breakout trade like I teach people to do. Bought it here at 17 and just been a monster run. Well, yes, it looks great. Would I buy it here? You know, I probably wouldn't. It's a bit extended for what I look for. I want at least some kind of little mini consolidation, something where it's absorbed some supply, and I'm more confident it's gonna make a quick pop. But if I owned it, no reason to sell. It looks very, very strong. If you want to just hop in and ride the wave, I can support that. Can we look at Wayfair? Ali, sorry if I missaid your name. Yes, Wayfair's W, right? Beautiful, beautiful. I mean, as clean of a trend as you're ever going to see. This, I mean, who would have thought Wayfair, right? Like 300% in the last 5 months. What a monster. It looks fantastic. Steady buying. Now, be cautious. We are right up here into the previous, I guess it's not really supplies, we're back in 23. So, you know, you look at a stock, I'm late to the party. Well, you know, it used to be 400. So, you know, maybe you're not. Yeah, looks wonderful. Again, would I buy it here? Probably not, just based on the way I trade, because the first question I ask myself anytime I buy a stock is, where am I wrong? Okay, at what price would I say, nope, I was wrong, I'm getting out of this stock? And I told you, I'm a giant chicken. I ain't risking 20, 30, 40%. Not going to happen, not ever. My max is about 15, and generally I don't like to get it over 10. So going, all right, would I panic looking at this chart if the stock fell to 79? Would this make it look awful? I mean, not really. Well, that's a 10% risk. That's about all I'm willing to risk. Now, if I bought it, you know, in here, and my 10% stop was down here, that'd be a little more reasonable to me. So, again, don't take anything I say as the stock's not going up or it's going down. I'm just looking, I'm trying to stack everything in my favor. I'm only trying to buy when I've got a massive advantage. And that's what I would encourage you to do, is to get odds on your money. T-Mobile looks terrible. Yeah, it was having a nice run. Listen, a good stage 2 stock does not fall below the 200-day moving average. And it's getting, see how it was a nice smooth run, holding the 50 like a stage 2 stock does, rising. Then you started seeing, boom, big wild swings. This is stage 3 action. Big swings up, big swings down, below the 50, in this case, below the 200. That's not a stock being bought week after week by institutions. So could it keep going? Sure. Am I going to buy it? Not a chance in hell. It just doesn't look like the model I want to see for a good, strong stock. Tyler came with the penny stocks. And by the way, Tyler, I got your email. I apologize. I haven't responded to it yet, but I will read it this afternoon. Okay, I'm going to just trust Tyler on this one. I don't know anything about this. Very, very thin. Trades $15,000 a day in total trading volume. So it's way too thin for me to get into. But if you guys like penny stocks, Tyler knows his way around these things. Met Coal, METC. Yeah, looks great. I mean, it's a volatile stock. This thing moves on average 8% high to low in a given day. It's only about $1 billion market cap, means it's still a small cap stock. They renamed it Ramaco. Huh? Okay, used to be Met Coal. Yeah, I mean, look, very strong. Not really tight enough for me to buy it, but I mean, I guess you could make a case for it and say, oh, well, okay, it emerged here, big 12% up day through the new highs. It could be a trigger event, sure. Fly, I don't think I know this one. Firefly Aerospace. Okay, recent IPO, went public August 7th. Not going to buy it yet. With this IPO, watch for that pattern I've been showing you. It may form here in the 40s. It may form at $8. I don't know. But the market did not like the valuation. They have dumped this stock hand over fist. Wait until it eventually absorbs this supply and does something like that, and then buy it when it breaks out. And look, this may happen like this. Whoops. It may come all the way down here before it does that. It may just rocket up unexpected news. In that case, we're going to miss it. But wait for it to absorb supply. Okay? Do not just go into these IPOs willy-nilly. Man, I sound like a boomer, willy-nilly. It's just not, it's not a recipe for success, okay? Harley Davidson, yeah, Harley's trying to get legs here. Not my favorite area. This is they've got some bad tailwinds. I mean, no one's buying motorcycles anymore. It's not a hot area of the market. Their margins, I don't think, are near as great as they used to be. And look, we've got a stock market making new all-time highs. And you're talking about a stock that is 58% off its highs. It's not at the highs of the decade. It's not at the highs of the year. It's not, I mean, it's just, yes, it's come down off the low, and maybe if you get it right, you might see a 15, 20% upside, but just not the kind of stock I'd be looking at buying. SCNS, penny stock, I don't see anything with this one. Octo is the one you said was a monster. I saw somebody's comment. We got started here on. Yep, that's a big mover. 1,388%. Is that real? Yeah, that's a big move. From $1 to $20. That's a monster. Yeah. I mean, if you bought it on Friday, you're probably looking at retirement right now. But no, I didn't get this one. TMF. What is TMF? Triple long treasuries. Yeah, I wouldn't do it. I mean, this is a bet that interest rates are coming down, so it's probably a pretty, it's I don't like these triple long ETFs. They have to use options and futures contracts and things that really decay the performance, so they're more like a day or very short term swing trading instrument. But a lot of this stuff is priced in. You got a lot to lose and not as much to gain. Wouldn't be my favorite. I want to talk you out of the trade, but it's not something I'm going to take. SSRM, what a monster. I mean, just absolutely parabolic from 5 to 21. Mining stock, precious metals. You know, we've been talking about this a lot. I didn't touch on it much this morning because mining stocks, oh, well, they are in here. They've fallen off the 1 month list, but look at here, mining and metals on the 2 month, mining and metals on the 6 month, mining and metals on the 3 months. I've done several videos lately about what I believe is a new super cycle in gold and silver. I'm very bullish on these metals. I got a big allocation to them. We've been talking about gold would finally break out here, and it has. I need to check my accounts because I'm probably smoking this. I've got my wife's retirement accounts indexed, and I've got mine allocated to top sectors, and so I'm seeing how much I can beat her by this year, which is dumb. I should just put us both in there and make more money, but anyway. Yeah, very, very, very strong. So the mining stocks, something we want to focus on. SSRM is just a beauty. I mean, there must be some kind of news or some kind of discovery because you see the big uptick in volume. This is when you can get a really big move. So you've got this big consolidation period in here. Okay, and this one didn't really shallow, just sort of a flat base. But June, July, just 2 months of here, just absorbing all that supply. And then you get it out of the way, and the stock is free to run. You also get this uptick in volume where there's clearly an increase in demand. So you have more demand chasing less supply. That's what leads to the big moves. And that's how this thing's up 75% in 40 days. So really, really strong here. If I owned it, I would just hold it. Right, what do they say? Ride her till she bucks you or don't ride at all, right? IREN's on the move again. Yeah, it's a more volatile name, but yeah, nice uptrend. Is WGS GeneDx? Yeah, this is one we bought way back here. We're still holding this thing in a fire trade. Yeah, it's kind of coming out of a bit of a consolidation here, sort of a pendant formation, I guess you'd call it. It's sort of wedged up there and pushing higher. This is a smaller stock. Actually, it's kind of a mid cap. It's bigger than I thought. but it's a volatile stock. It makes these big gaps one way and the other, so a little harder to trade. But yeah, I mean, it looks good. I don't see any reason to bail out on it. Okay, got a lot of stocks in here. Let me see if I can get through some of these. We'll go rapid fire. All right, let's go. Roblox. Looks strong. Once again, big move. First test of the 50. Okay? And I will make that 50-day moving average red just so you guys can see what I'm talking about. Oh, maybe to do it here. There we go. First touch of the 50. You almost always want to buy that. And so it touched it, bounced. It was a great entry point right there. No, it is slowing down. It's losing some momentum. Relative strength rating still a 98 out of 100, though, so still a top performer. Looks really strong. PPTA, the precious metal stock. Yeah, this one's pretty volatile, and you're going to find this, like, don't be afraid to look at a chart and be like, I don't know. You know, you've seen what the big ones have in common, a steady, constant buying support from these institutions. They hold the 50. They trend well. This thing drops 40%. It rises 40%. It drops 25%. Then it doubles. Whoops. Then it makes another big, massive drop. I mean, it's just very, very volatile. So this is not the stock I would want to buy. However, if I did want to buy it, this is right where I'd do it. Because you've got, and again, you kind of blur your eyes a little bit with this one, but you've got this big shallowing pattern forming here. This was the breakout. I expected it to run higher. It hasn't done much. It is what we call a squat, where it comes right back down and sits on that breakout area. But this is the danger zone. This is where you can buy it, because you know it should bounce from here. And if I were buying it here, I would probably, if possible, put a stop at like 16 and a quarter, 16.20 to risk about 10.5% if you can stomach it, and see if it rallies from there. It's not a bad entry. The more I look at it, I like it. It's just these big 20% overnight gaps really, really scare me. QuantumScape, QS. Oh, a big gap up today. My older brother's got a big position in this stock, and this is why I got to be careful what I tell people, because I told him about this stock back here in 2020. He rides it up. I didn't think about it anymore because I'm somewhat short-term in duration. Little did I know he held this thing from 120 down to 3. I'm like, what? So now it's rallying. He's excited. This is a company, a battery company. They claim to have solved the solid-state battery crisis. Buffett and some other big names were initial IPO investors. I think this was news that their batteries are going in Volkswagens or something like, yeah, Volkswagen debuted it. So it's very much news driven, but up 26% today. You know, if you bought this, if you're looking at this as a catalyst, the only way I'd trade a stock like this, I would buy it and I put a stop at the low of the day and say, all right, it made a big gap up. Let's just go to a 5-minute chart. It made a big gap up. There's the 30-minute opening range. I would either put a stop at the low, or I'd wait till it broke out above the high and put a stop at the low. But if this is, you know, when stocks gap like this, it's generally going to be a gap and run or a gap and fall. They don't normally gap up big and just stay there for a week. So generally, this is the start of a big move higher, or people are been chopping around at $7 or $8. They're all going to take advantage and get out at 10. That's going to sell it back off. So if it's going to run, it should do so. Don't let it get below the low of the first half hour, first hour of the day. Porch Group, PRCH. It's getting scary how many of these tickers I know at this point in my life. Yeah, wonderful. Wonderful move. And this is kind of what I'm talking about when you look at the stock today. See this big gap up it had? See how it closed the day at 6 1/4, opened up the next day at 8. So it gapped up, 27%, pretty much the same as QS did today. And you put your stop loss there at the low of the day after the first hour, and it did just run, and it closed high, and it ended up being the start of a big move. So in this case, you would have risked, 7%, 8%, to take a chance on a gap, and you'd be up 130. It's a pretty damn good. But yeah, looks great. Looks very strong. If you haven't already, do me a favor, hit that like button on the video. I don't know. Apparently it helps the algorithm or something. But anyway, just mash that if you would. And if you haven't already, there's a link. If you want to join us, we do these live sessions twice a week. You can join for an entire year. You'll get the market health indicator. You'll get the industry strength indicator. We'll send you some updates throughout the month and big opportunities we see. It's $5. Click the link, join us there, and we'll try to get you up to speed and make you a profitable trader as quick as we can. FMST, setting up as a breakout. Let's see. Yeah, foremost clean energy. Okay, so this is a penny stock. Otherwise, I'd say yes. You're right in spotting the pattern. You've identified the visual you should look for. It's exactly what you want to see, in fact. This big 700-800 run higher. Let it come in, absorb the volume, compress, tighten up. Yeah, absolutely. This is textbook picture perfect. The only problem for me is this is a $30 million stock. It trades on average $1.3 million in total trading volume per day. So you compare that with, just give me a regular stock like 3M. It trades $430 million a day. So don't try to go in there like, I'm not going to take a $50,000 or $100,000 position in that stock because it's too thin for me. But yes, Stephen, great job. Looks wonderful. Clean energy, actually seeing some strength there. The ETF is iClean, and it's looking pretty strong. So, yeah, if it fits your model, absolutely. Absolutely. SLVP, beautiful. Oh, yeah. The silver miners. SIL is the other one. Nope, SLI. SIL, yeah, silver miners ETF. So kind of pick your poison, and these both look great. For those who didn't watch the videos, go to my channel, click on the last two videos I did. One is on silver and one on gold, and I think we're in the early stages of a big super cycle in these metals. I talk about why that is, what's going on, the technical pattern. I don't want to waste everyone's time in here since most of you have seen that video, but I encourage you to do that. I'm very bullish on metals. I've got about a quarter of my retirement dollars to metals and mining stocks, and I may increase that. So definitely keep an eye on that area, especially over the next 5 to 10 years. If you don't own some gold and silver, I highly encourage you to consider doing so. This is not investment advice. This is just what I would do. So I guess I shouldn't say I encourage you to do it, but that's what I'm doing. I believe we're going to see massive inflation. I believe these metals are going to double and triple and quadruple over the next 5 to 10 years. And so me personally, I want to own some. Denison Mines, yep, you see it running into supply. We always want to look at stocks in terms of supply and demand. And so supply is people wanting to sell it. Demand is people wanting to buy it. What do you think all these people who bought Denison Mines in October and November of last year have been waiting to do? If you bought a stock at 220 and it fell to 120 and you weren't smart enough to sell it and you didn't have risk management in place, what are you trying to do? Everyone here should have the exact same answer, and I know everyone how you think. You just want to get out at even. You want to get out a 1% gain. You want to get saved. Who didn't lose any money? That's called supply. That's why the stock stalled here in July, here in August, stalling here in September. This is pent-up supply from 2 months of buyers in October, November, who have been underwater for the last 8 months, dying to get out at break even. Watch out for these areas. One of the reasons breakouts into new highs can be so strong is that there is no supply above you. If Denison Mines, which it may very well do, comes in and does something like this and tightens up and breaks out higher, guess how many people are waiting to sell and get out at break even? None. It's never been that before. Everyone who owns Denison stock, whether they bought it at $2 or 2 cents, is profitable. And so that's why these stocks can make, I love new highs. Some people are scared to buy new highs. Like, oh, it's at its highs. I don't want to buy it there. Of course it's at its highs. If you want a stock to go up 300, 500, 1,000%, it's got to make new high after new high after new high. Do not be scared to buy a stock at new highs. Go back and look at the big runs in Tesla. Go back and look at the massive run it made in 2020 and 2021. And people look at this chart and say, oh, I don't want to buy it here. It's at the highs. And then it made another and another and another. It made new high after new high for a year and a half, and you made 10, 20 times your money. And throughout this period, you had multiple opportunities to buy the breakouts. The same pattern I'm teaching you guys here. Look at Tesla. It is clear as day. Go back in time. Pretend you're here. The stock is tripled in a couple of months. It absorbs supply. It tightens and shallows and comes in just as pretty as can be. Buy the hell out of this thing when it breaks out. And if you did, you were handsomely rewarded. And stocks will generally just kind of follow this stair-stepping pattern. It makes a big run up. This was a double. This wasn't a really clean pattern, but it tightened up, broke again, comes in again. Again, not always going to be perfect, but shallows out and tightens up and breaks out again and goes from 150 to 250 and then eventually rolls over and the party is over. But you could have bought the thing here at 40. You could have bought it here at 120. You could have bought it here at 150. And every single time you doubled your money or more. All buying at highs. Do not be scared of buying stocks at highs. I would rather buy stocks at highs. And now that I look at it, this looks pretty damn good here. Look at Tesla. Do you see it? It's gone from 200 to 350. That doesn't look like much because of volatile stock. But folks, that is a 70% move in 2 months in a $1 trillion company. That is a massive amount of buying. And then the same tricks are being played as it shallows and absorbs supply and tightens up and comes inside. And when this stock gets above 360 a share, I would buy it. I'd put a stop loss right here at about 325. I'd be risking 10%. And my goal would be, at a minimum, a move to previous highs, which is about a 30% upside. Does this make sense? Yes or no? Type in the chat for me. Is anything I'm explaining to you over your head? How many times you got in these webinars? I mean, you got to have my double super secret indicator. You need this super squeeze with my little red and green dots. It is nonsense, folks. It's all common. If it doesn't make sense to you, do not listen to those clowns. If it works so well, they wouldn't be sharing it with you. We haven't used a single indicator today. Not one. You don't need them. The only things I'm looking at the relative strength rating. It just ranks the stock based on how much it's up versus others. We'll look at some very simple moving averages, just the average price, the average close for the last 20 or 50 or 200 days. We're looking at volume, which is just how many shares traded. No red and green dots. I mean, somehow I'm subscribed to the Simpler Options channel, and they have you got to have my double super secret squeeze. You got to have my squiggly indicator. You got to have my magic zones and my voodoo lines. It is total nonsense. It's a parlor trick. They might as well be a floating circus, folks. There are 3 things that go into every indicator: time, price, and volume. That's it. How many shares were traded at what price and at what time? That is all there is. Every indicator under the sun is come from those 3 simple things. You do not need all these ridiculous indicators. Don't let anybody lie to you. You don't need it. All this should be common sense. Loan Depot on the run. Let's take a look. LDI, somebody says. That's on the run, all right. I don't know what this company does. Rental leasing. Know what the news is. It's something, though. Can't go up 100% in 2 days without some life-changing piece of news. And again, this is not one I would have taken by any means, but you can see similarities. So it goes from $1.20 to such an 80% move in a month. It absorbs. It shallows. Can you see it? Are you guys starting to spot what I'm looking at? Listen, this is Monday morning quarterbacking. I'm not saying, oh, I would have definitely bought this too. I would not have bought this stock. It was an area I'm looking at. It's thinner than it wouldn't have come across my radar. But if it's the kind of stock you're watching, everything I've shown you today played out perfectly right there. And you'd have doubled your money in 2 days. Right? All right, if your comment is more than 5 minutes old, I've probably lost it at this point. So type it in again if you want me to look at it. I'm sorry. I'm getting caught behind. SoFi, yeah, it looks great. I've mapped this one as well. You can see the breakout here in June, how beautifully this one played out. And look, this is one where I'm not saying it's going to go to the penny, right? Let's go back in time here. I would have bought this stock right there at 14.80 as it broke out. My stop loss would have been the last swing low, which would have either been down here to risk 10% or really tight beneath that last little swing low in here. Either one would not have gotten hit. In this case, it would have been a risk of a whopping 5.5%. If you want to take it down here, it would have been 10%. It ran, pulled back a little, didn't go anywhere near your stop, and took off. And for that 10% risk, you would be up 75%, 85 days. Okay? Livermore proved it. My man, Robert, you know the greats. Absolutely. Livermore's the best who ever did it. INVC, opening range breakout today. Oh, all right. Tom, coming in. Good. Yes. Okay. Did you trade it, Tom? We'll go over the opening range breakout strategy another day, 5, 10, 15, 20, 25. Yep, there it is. Boom. So did you buy it here at about 179? Or did you do a 15-minute breakout or a 5-minute? 177 he's in. 15-minute breakout. My man, Tom, look at you. Beautiful. Good for you. Hell yeah. This is what I want to see. We'll cover this in another session. We did it in one of the live sessions earlier, but it's an opening range breakout strategy. It's a way to get stocks that gap like this. So Tom, I don't want to speak for you, but I'm guessing what Tom saw, the stock's gapping up 8% overnight. It was on a daily chart in a strong pattern, okay, very up here. So he does you bracket the first 15 minutes. So 5, 10, 15 minutes, these first 3 candles. So if it gets above the high, he's going to buy. His stop loss is the low of the day. So he bought here at 177 perfectly, I may add. And his stop is down here, so he's risking 4.5% on this. So Tom gets tagged on this stock. He ain't out on the street with a cup in his hand. He's down 4%. Bloody freaking da. But as we've seen over and over, some of these stocks, the initial gap is the beginning of a big, powerful move higher. And if this thing at the end of the day is at 220, 215 a share, he's in a wonderful position. He can raise his stop to break even or leave it here and see if he catches a monster move. Good job on that one. All right, Sean, you got a lot of names here. Let me run real quick. URD, not showing up for me. MSKR, these are all pennies. Yeah, these aren't even showing up for me. I don't know what those stocks are. PVLA, Monica. Yeah, looks good. Tyler sent me an email on the biotech sector. This is a pretty clean breakout over in here as well. Wasn't perfect, but, you know, you see a lot of the characteristics that we look for in here, right? But, yeah, it looks really good. Nice, strong trend. If you own it, hold it, stay with it. Marvell, somebody mentioned MRVL. Nah, wouldn't be one I like. You can see the breakout here. Had a nice little move. Notice how it come back. Notice where it initially bounced. Look as I draw that breakout line out. See how it comes back right to that area and bounces. Right to that area and bounces. Now it's giving it up. It's rolling over. Wouldn't be interested in this one. It was a leading stock back when, but it's a massive laggard right now. The relative strength rating is a miserable 7 out of 100. It's going to, as Randy Jackson would say, that's going to be a no for me, dog. Lucid, LCID. Definitely not on Lucid. This is another grade A piece of garbage at a relative strength rating of 3. Has 0 characteristics of anything I want to buy. It is trending lower. It is making new lows. In fact, you see it broke out. Let me show you a little trick. If you flip the chart upside down and it looks like a buy, that's not a good sign, right? So there's, and you know, it was support was at 2020 blowing through. Now, listen, I am not saying the stock's definitely going lower. It is very much possible this ends up being the low and the stock rallies from here, but that is a long shot bet. It is in no way putting the odds in your favor. And it's if you are an investor and you think it's cheap based on fundamentals and they're going to turn around and suddenly sell more than 8 cars a month, maybe you know something I don't. I've never seen a Lucid on the street, and I'm a huge car guy. I know all about the Lucid car. It's beautiful. It's way prettier than a Tesla, but they're not selling any of them. So nothing about this is a buy for me. BULL, UPS. How'd you guys sneak in here with these UPS stock? Webull, absolutely not. I hate this stock. I hate this company. I hate their trading platform. I could not hate a company more than I hate Webull. That's not true. I could, but I don't like it. I've used it. It's total garbage. You know, if you're trading on Webull, if you like it, great, but I can pretty much guarantee you any experience at any other broker is going to be better than Webull. So there went my potential sponsorship with Webull, but I hate them. UPS. All right, this is a fail. This is a failure. All right. Now you see what I've drawn out here. I didn't keep up with this one, but here's the pattern off the low. All right. Let's everyone test me. Let's go back. All right, in this setup, your buy point, where you should have bought, where I wanted to buy, would have been right here. In this situation, where would your stop loss be? At what price, if this stock hit, would you have sold that says, nope, I'm wrong, the setup has failed? Who can tell me? Give me a number. Should be pretty clear here. Timothy? Yep. It's like a 5-second delay in y'all's comments. 98, Travis. 90, Matt. No, way too much room. 99, the swing low, Robert. Yep. Somebody said 100. That'd be tight. You could do it. I personally, yes, I would have done 98. I would have done it right here beneath the swing low. Right? Because shoots up, it pulls back, up, back. I see. You could have said, yeah, 100. Okay, I can see the case for 100. That'd be really tight. Either 100 or like 98, right? So that's what I would have done. I'm out, right? This is not quite 98. The low here was 98.62, so it would have been like 98.60. Let's see. Yeah, I don't give it any room. A couple of cents below that low, that's it. Okay, that's 98.60. Hit my stop and I'm out. Period. Don't look back. I would have lost 4.3%. I'd have been just fine. And it would bounce. Oh, maybe I shouldn't have sold it. And then it's down here. And I'm happy to take a 4% loss because it would have been a 19% loss. They're not all going to win. And it's good. I'm glad y'all brought this one up. It's a failure. Would I buy this stock? Not a chance in hell. It looks absolutely terrible. It's making new lows and the market's at new highs. Everything I don't want to see. KGC, is that Kinross? Yeah, love Kinross Gold. Beautiful stock. You can see the pattern. We actually bought it back here in our Alpha Stock Service at 6, so we're sitting pretty on this one. But again, you're going to see usually in a good stock, and this is a good stock, when it's going to run 300% in a year and a half, you're going to see a couple of buying opportunities. And there's a pretty clean one in here. If you look at this in log scale, it makes it easier. There you go. So this one, and this wasn't the cleanest. It was kind of tightening. This is what I call a shakeout move, where it runs, stops, and then tightens right back up. Those are usually pretty clean. Bought it here. Never would have hit your stop. Ran 46%. Had another chance, again, to buy it over here in July. And I think I told everyone about this one. Hopefully some of you guys listened and bought at 16. If so, you're doing well. But, yeah, if you own this, beautiful. Would I buy it here? Probably not, just for the reasons I've shown. It's it's a bit extended. It may very well keep running. It also may, come in and absorb some supply here to see if it's going to keep going. So I wouldn't buy it here as a new position, but it looks beautiful. And it's a great example of following the right areas, looking for these clean entry points, risking 7, 8, 10% max, and going for a ride, right? All right, we are about 20 minutes over time. Probably need to wrap this up here in just a minute. How do you get to log scale? Hazel, if you are using TradingView, hover over the price scale here on the right. You see that L? It stands for logarithmic. That's standard scale. That's log scale. Standard scale, every inch or whatever metric is $2, $2, $2, $2, right? Logarithmic is percentage base. So this is 20%, 20%, 20%, 20%. And it just evens out the move in percentage terms. Because you get a big move like this, you can see it was actually a pretty steady climb. But if you go and take it out of logarithmic scale, it looks like it kind of just went parabolic, and that's just not the case. The difference is the price. That's why when you look at Warren Buffett's wealth, he made 90% of it in the last 10 years. Well, yeah, because, $80 billion at 10% grows a lot faster than $8 billion at 10%, right? If you put it in logarithmic scale, his wealth chart looks more like this. So don't let anybody trick you with the charts. Okay. DraftKings, what did I mention? DKNG. Wouldn't be my favorite. Looks a little weak. 86. I mean, it's fine. It just... it's big gyrations. I mean, this stock fell 45% in 50 days. I realized that was during the tariff situation, but what did tariffs have to do with gambling? I don't know. I can't explain it. When you look at 1,000 charts a day, it just doesn't look good for me. Okay, any new setups? Somebody asked 17 times. Let's take a look and see if we can find some in here. Let's look at some of the mining stocks, because this is really where I think you want to focus on in here. Cleveland Cliffs, Peabody, U.S. Steel's no longer traded. Alcoa looks like it wants to go. Newmont is beautiful. I think MP is a pretty good buy here. The first little pullback to the 50-day moving average. I think you could take a stab at MP. This has been the monster, the rare earths company. They've been selling to the Pentagon, been selling to all the big players. This is an absolute monster. Relative strength rating 99 out of 100. Like we talked about, first pullback to the 50 is usually a buy. I would take a stab at MP here. Royal Gold, if this thing will stall for a bit, you see you've got the supply from over here on the left side. You see all the buyers in April and May that have been massively underwater. This could be a really good setup if it will just stall for a week or two and absorb that supply, then buy the breakout through 188. So keep an eye on Royal Gold. I would definitely consider that. I just think it's due a short pullback because of the supply. Uranium Energy's on the run, CMC, Steel Dynamics. All the steel stocks look like they're really getting coiled to make a run. Alcoa is probably the prettiest of all. If you just kind of draw a line through here, you can see how it has sucked up all the supply. It has been tightening and tightening and tightening and tightening. So if it comes to the 200-day moving average, I could definitely see a buy in this above 32.50. Which would be buying it on a buy stop or on a breakout above 32.50. If that happens, my stop loss would be right here, beneath that swing low, for a total risk of about 7%. And always be cognizant of what kind of stock you're buying in terms of risk and reward. So if you're buying something that historically makes these 50 and 80 and 100% moves, sure, it makes sense to risk 10, 12%. If you're buying Walmart, that makes 20% in a banner year, don't risk 12% on that. Okay, you want to get your risk down to 3 or 4. Really, really tight setups on those. Hecla Mining, what a monster. This is the one I talked about in yesterday's video. It's tacked on there 8% today. My favorite silver stocks. It's on the move. What else is up on the day? A lot. Let's see here. See Steel Dynamics also coiling up a bit. Core Natural, Zerly, Nucor looks like it wants to tighten up and go. See how it's not perfect yet, but it's starting to kind of come in here and tighten up and get ready to run above 150. So that could be a good one. CDE, Core Mining. And listen, some of these, if you just like, I want to get in silver, I don't want to wait, I want just take some pilot positions, trail a 15% stop loss, take half positions. If they keep running, great. If they don't, you haven't taken a big loss on them, and just hold kind of as a placeholder in that stock. You're going to watch the stocks you own more carefully than the ones you don't, and you'll see when you get new buy points in them. Yeah, that Metco looks pretty good. Materion, what do they do? I don't know how this got in my metals group. They a mining company. Electrical, thermal, structural applications. Non-precious metal. Okay. Yeah, I mean, it's tightening. Could be a good buy above 115. See, that looks terrible. It's in the right group. The stock looks terrible. No interest. I only want the best. Worthington Steel. I mean, all these steel stocks look poised. All of them look poised. What is the steel ETF? The VanEck Steel. Where was it? There it is. SLX. Yeah, it looks like it's getting ready. Now this setup, it's set up in a big breakout back over in here in 2024. And this is very much tied to the construction sector, right? It used a lot of steel in construction. It was setting up here just as the home builders were. The home building rally fell apart as interest rates did not drop as expected. This, in turn, has faltered, and now it is finally coming back, and after a big dip coming in, starting to tighten. So, yeah, I'm starting to like all these steel stocks. They're not historically huge movers, but when they do, it's a big move. And so you've got basically 4 years of compressed energy in this sector. And I'll end with my macro case on it, which is this. And I don't want to get political. Here's the thing. They're never going to quit spending in Washington. I don't care if we vote in Republicans or Democrats or libertarians might, but we're never going to elect them, apparently. They're never going to quit spending. This was the best chance we had with Elon and the Doge team and Trump, and they didn't do it. We still have a deficit. They still raised the debt ceiling $5 trillion. They're never going to cut spending. The deficit's going to continue to get wider. And as it happens, as the debt increases and they don't cut spending, as the tax dollars pay for less and less and less of the bloated government programs, they're going to print and borrow more and more and more. And there's only 2 things that can happen from that. 1, they default on the debt, never going to happen. Or 2, massive inflation. Because whether you issue huge amounts of debt, the market's not going to want it. They're going to bid it up. Or they print the money, which causes inflation. The world is waking up to this. Other countries and investors are less and less, have less and less faith in the U.S. dollar, in U.S. debt. And as people want it less, they're having to print and make more of it. The printing lowers the value of the dollar, which hurts the bonds. The massive issue of bonds creates too much supply, which pushes, there's not enough demand to meet and pushes interest rates up. I'm not saying it's going to happen in 3 months or 6 months, but over 3, 5+ years, we are going to see more inflation, and all that leads to rising prices in these physical assets. Of course, that means the currency metals like gold and silver, but also things like steel and lumber and farmland and everything in between. So I think that's what we're seeing in the market today. I cannot be the only one with enough brain cells to put this stuff together, and I think other people are seeing the same thing, and I believe that is going to be an area that outperforms in terms of commodities and metals and things over the next 3 to 5 years. So keep an eye on that area. But if you haven't already, before you go, do me a favor, hit that little like button on this video. I would appreciate it. It just helps us out. And if you haven't already, if you want to join us, we do these live twice a week. I do the Monday sessions. We also do a live session over Zoom with our analyst, John Fadday, every Thursday. Same time, same format. We try to put out a new trade recommendation once a month or so, some bigger picture ideas. We give you access to our indicators. There's a couple of basic ones that I've shown you there. Not really indicators, just these basic tools to see what's rising and where the market is, or where the dollars are flowing. So go to that link. Again, the link, I think it's pinned in there, but it is tradewithross.com. It's like $5 if you want to join. You're not going to hurt my feelings if you don't, but if you do, you'll be members with us, and you'll get all the invites to these. So thank you all for joining us this Monday morning. If you're watching this recording, appreciate you watching. And if you have questions, put them in there below. Even if this is after the live session, these do pop up on my phone. I do my best to answer any and all questions or comments on YouTube here, so I promise I will get to them. If you have a question about a stock or a setup or something, please ask it. I want to help in any way we can, all right? So thank you all again for joining us. Again, the link, tradewithross.com. Like this video. And if you haven't subscribed to the channel, I'm putting out new content each day. Anything I think will help make you money, I'm going to feed to you, put out, and just try to help you guys be better traders, investors, and live wealthier lives. So thank you all again. I'll see you in the next live session.